Good day, everyone. Good morning to people who are east of me, and good afternoon to people who, good morning to people who are west of me, and good afternoon to people who are east of me. It's very nice to have everybody here, and we're looking forward to a really good discussion. My name is Kecia, and I'm the Executive Director of the Center for Affordable Housing Finance in Africa. And with my colleague, David Gardner, we're delighted to welcome all of you to this seminar, webinar. We are hoping for a rich set of presentations and some really good discussion. Very excited about discussion with colleagues within Ghana, as we present some of the work that we've been doing with our partners, and to get a sense on how this will land in the current affordable housing market in Ghana, and how we take some of these ideas forward. As many of you know, the Center for Affordable Housing Finance in Africa works across the continent. And what we're really trying to understand and explore and then promote is working affordable housing markets. And we do that in a number of ways, but ultimately what we champion is market intelligence that supports the investment argument for affordable housing. So the presentations that you'll be hearing today result from work that's been done over the last probably 2 years, where we've looked at the Ghanaian market and thought about it from a range of different angles, aware that, of course, the context in Ghana is changing all the time, and that there is a policy and a regulatory framework, and that there's a whole ecosystem of activity that is underway. So we are very excited to share this work now with colleagues in Ghana and to understand how and where this should fit going forward. Our agenda is up on the screen, and our intention is to have this conversation over the next 2 hours, hour and 45 minutes or so. We're really looking forward to seeing where it goes, and we are absolutely responsive to you, the audience. So I hope that you will engage and will put your comments and your questions in the chat. If I can ask everyone to just to introduce yourselves in the chat. We unfortunately, in the context of a webinar, we can't have collective introductions, but it's really nice to know who's there. So please introduce yourself, use it as a place to comment on any insights you might have, and then specifically questions that we can then save for the question and answer period. And I, together with all of my speakers and panelists, will monitor the chat and see if we can weave those issues into the conversation. You're also welcome to post anything that you want to share that you think that this audience would be interested in seeing. And we hope that this is a good place for collaboration and a basis for carrying on a discussion going forward. So let me stop there and hand over to my colleague, to Vimal Parmer, who's the Senior Capital Market Specialist at FSD Africa. And Vimal, would you like to make some opening remarks?
Thank you very much, Kecia, for the introduction, and thank you everyone for joining this webinar. I'm happy that you are joining this virtual roundtable on Ghana's housing economic value chain and data landscape. We partnered together with Center for Affordable Housing Finance for this research to develop the housing market in Ghana. As you might be already aware that, there's an estimated 2 million plus housing deficit in Ghana. But affordability has been a key concern in the Ghanaian housing market, mainly because of interest rates being high and mortgage rates not being favorable for potential homeowners to own a house. There's also been concerns about the currency depreciation, which is also further accelerating the inflation rates. But despite all these challenges, I think there's a lot of opportunities which exist in the housing sector in Ghana. the Ghanaian economy is growing very well year on year, and the real estate sector is also doing quite well. There is significant capacity in terms of the supply side. I'm aware that there are some investors looking at providing capital in the Ghanaian market to develop affordable housing or student accommodation, because Ghana has the capacity in terms of developers and general qualified contractors to do the work. Also from a regulatory perspective, there are a lot of initiatives which has been brought forward. So the National Housing and Mortgage Fund is one of them. They will be presenting today in the panel session. Mr. Delali Zomanu is on the panel. And the aim is for us to attract long-term investment capital in the affordable housing sector, but also to make this housing sustainable. And by sustainable, I mean to include concepts of green housing, for instance, in future, in case of such kind of climate actions, then we will be able to have houses for the citizens of Ghana to stay and also afford, and which will also combat the possible climate changes and adapt to it. I think also from the government and ministry's perspective, there's a lot of effort which have been put. The Ministry of Finance, the Financial Sector Division, has been working on a long-term finance initiative. We have indicators on housing space under the long-term finance initiative, which can now be used to benchmark Ghana and other African countries to attract long-term capital. So I will really hope all the panelists and all the stakeholders to make good use of this virtual roundtable, to make these discussions fruitful, and to grow the Ghanaian housing market going forward to a sustainable, to provide sustainable housing. Thank you very much.
Vimal, thank you very much. I wonder if you could put a link to the long-term finance work into the chat, because I think that might be interesting for people to see and to understand that that's work that that we'll be carrying forward as well.
Sure.
Unfortunately, we're not presenting explicitly on that, though we'll be talking about long-term finance for the next 2 hours, but indirectly. So if you could put the link on the chat, that would be really nice.
I will,
so
sure.
We now have 3 presentations, and they will cover the next 40 minutes or so. And really what we were trying to do when we started this, and this work started really from an invitation from FSD Africa to explore the Ghanaian economy and the issues that relate to housing therein, with a view to promoting financial sector development so that it can promote housing sector development. And that was really the angle that we came at this from. Work that we commissioned was work that's already been done in other countries as well. And so what's very nice about this work is that it has comparison opportunities with other countries, and we can think broadly about the notion. So David Gardner will now talk about the impact of housing on the economy in Ghana and how we measured the housing economic value chain. Then Chris Garbers will talk about the data landscape for housing. That's also work that we've done with our partners at Reall as well, covering the breadth of data that's available to really support a good investment decision in favor of affordable housing. And then Reall will come on, Amos Mthembo will come on and speak about the how do we take this information, our analysis and our research and the data that we've collected, all very interesting and for many of us completely stimulating and exciting. And how do we turn that into making a difference in Ghana's housing landscape and the delivery of affordable housing for low-income people in Ghana. So that's going to be the arc of the conversation. Please continue to put your questions and comments into the chat. And I look forward to then working with those with our panel, which will follow with reflections on all of this work and how that impacts on their perspective in terms of where they are in Ghana's housing ecosystem. So let me welcome David Gardner. We've been working with David Gardner for a long time, not just in housing economic value chain studies, but for the last couple of years with a focus on that. David, would you like to introduce yourself further and give your presentation? I'll stop sharing my screen and you've got 20 minutes. Thank you.
Thanks, Kecia. I just want to get my presentation up. Still saying I can't share. There we go.
Excellent.
All right, please confirm you can see that in full screen, Kecia?
I certainly can.
Good. All right, so as Kecia said, I've been working with CAHF for a number of years on various projects. This has been a collaborative effort with myself, Keith Lockwood and Yakus Pinar, around work we've done in 8 African countries, looking specifically at the economic impact of housing construction and rental activities. We are really excited by this work because we feel it really starts delving into what housing practitioners and policymakers can do to build on the already known context and impact of housing in economies. But what we are hoping to do is to start to develop the levers around which those can be manipulated positively by governments and other regulatory authorities to make that happen. So I am going to take you through a whistle-stop tour of a new report, which will be out on CAHF's website very shortly. The cover page is on the left-hand side. It looks at Ghana, economic impact of housing construction and rental activities. And we look at the cost benchmarking of housing in Ghana against other African countries, as well as the economic value chain and the impact of the value chain on the housing economy of Ghana. So please look out for this report. It will be out very shortly. And I'm going to do the impossible of talking through a very dense document with a huge amount of information in a very short space of time. So bear with me as I rush through things. To start with, I just wanted to indicate that CAHF is part of a group that's looking at elevating housing as a COVID-19 response strategy. And there was a report produced a while back called the Cornerstone of Recovery, which looks at the power of housing to start looking at driving some of the macroeconomic and household level recovery that is required across all of the developing world. And from that perspective, please, we call on all governments, private sector, development institutions and civil society to work together to continue to see how housing can be a critical component of the recovery of our economies after COVID. This work is jointly undertaken by CAHF, HOFINET, the Affordable Housing Institute, and Habitat Terwilliger Centre. I also want to indicate that there is a lot of work underway out there in the world around looking at the impact of housing in the economy. Much of that looks at the conventional approach of looking at housing as a proportion of GDP. In other words, how does housing stack up as a sector of our economies, and what does it do to influence and contribute to growth? These are really normally based on systems of national accounts, supply and use tables, and other statistical input-output instruments around GDP management. So there's significant work being undertaken on that, but what CAHF is wanting to do is extend that work. We take note of that work, but specifically we want to start delving into the composition and implications of housing and its impact on the economy. And from that perspective, we really want to ensure that we're looking at where the impact is felt in an economy. What does this economic activity deliver in terms of the types and numbers of houses? What does that mean in terms of formality and informality in housing? How do we better identify and measure these amounts? And what does this tell us about how we can influence the impact of housing on economies generally? So we trust that we will start to give you a sense of that. Our work around Africa has incorporated 8 countries to date, of which Ghana is the most recent. And we will provide a little bit of comparisons to that as well, but there is more of that in the report as well. The report is divided into 4 key segments, which is outlined in that graphic on the right-hand side. It starts with a contextual analysis, which looks at macroeconomic, demographic, and other factors. We then move into housing cost benchmarking, which looks at how to quantify housing in a scientific basis in a particular country and in a way that is comparable to other countries or cities around the globe. We then look at a market analysis, which looks at the macro-micro divide and examines the dynamics of the housing market generally and how we can start to understand the different components of the housing market and how they work together. And then there is a section on the housing economic value chain specific level analysis of the impact of housing on Ghana's economy generally. I will generally be following that format by looking at those 5 parts of the presentation. And I'm going to immediately start by looking at a background, which is really what impact does housing have on developing economies and where is this felt? So there really are 10 impacts that we identify as we go through this work, starting with one on the left-hand side. When you invest in housing, you are as a household investing household savings and resources instead of spending that income on other aspects. Number 2, that starts creating long-term household investments in something rather than just relying on consumer spending. Thirdly, it creates housing for more households. And so often in the developing world, what we invest in housing is not only for us, but for other members of our family or indeed for rental purposes. 4, this generates a regular and escalating household income. In my mind, that housing is perhaps the most successful SMME component across the world in terms of money invested, sustainable income being generated from those particular investments. Number 5, economic value is added to the economy during construction. 6th, this stimulates inputs upstream in other economic sectors, particularly the secondary and the tertiary sector, the manufacturing and the services sector. Then this generates a fixed capital engine of the economy that grows. It sits in the gross fixed capital formation in the economic accounts and, like a factory, continues to generate wealth in the economy. 8th, it stimulates demand for other linked goods and services. If I have a house, I probably want a whole bunch of other consumer goods and supplies and services. And I'm often therefore also in contact with various other socioeconomic needs that I can invest in or purchase. Number 9, an often overlooked one, this stimulates government services and taxation. A well-managed economy is an engine of income for governments to be able to push forward with other aspects of expenditures in economies. And number 10, it creates a base for further household investment. So this is not just about spending, it's about a whole bunch of economic impacts that we need to start considering. We start by saying that Ghana's housing sector is really not meeting its potential as an economic growth driver. And in terms of the formal statistics, they also seem to be under-accounting for the housing impact. This is a graph on Ghana's GDP growth. And you will see that construction, which is all construction, not just housing construction, is at 9.3% of that amount in the middle of the slide. And indeed, at the very far side, there is a real estate component, which is extremely small and we believe significantly undercounted in terms of the role that housing plays in Ghana's economy. So what we then need to do is start looking at the context and the housing market. How do we understand and respond to Ghana's housing market overall? What we do is we look at the housing pyramid, the conventional housing pyramid, and we start looking at various components of that pyramid. Number 1 is on the left-hand side, the different household income categories that we need to consider. In this case, we've divided them for convenience into $1,000 increments. And then down in the middle here, we split all households into rural and urban households. So we have 44% of Ghana's households being urban at this stage, 3.3 million versus 4.2. What we then see is 6% households in the urban space being predominantly focused on the middle to lower income sector of the population, which is this sort of belly in the middle over here. And that is good news for Ghana from the perspective of growing GDP per capita and household incomes being relatively buoyant, although that obviously has been impacted recently. But at the same stage, it does also indicate a massive amount of population in the lower income profiles, which really leads to perspective. And we also need to ensure that we don't undercount and forget the rural households, which still account for 44% of households. It must be said that of Ghana's 31 million people, the 57% that are urban will continue to grow. And as we heard from Mr. Parmer in his introduction, we are looking at an estimate of 200,000 new households per annum requiring accommodation, of which 160,000 are estimated to be in urban areas. And indeed, at the moment, probably only 4,600 houses are being produced through the formal housing markets at the moment, meaning that well over 90% of all new households in urban Ghana are being housed informally. So we look social housing affordability, but that needs to be galvanized with housing finance. And then indeed, we have a huge impact of COVID that we must consider as we go forward. Let's now move to housing cost benchmarking. CAHF's methodology looks at a range of houses in a particular country. We were fortunate in Ghana to look at both Kumasi and Accra. And we looked at various houses from a 35 square meter formal house up to an 8-story apartment. This, I must indicate up front, does not mean that we consider the 35 square meter house to be the smallest that should be provided. Absolutely not. It is a starting point for getting housing practitioners to understand costs of housing and how to drive well below the 35 square meter and well below the $43,000 mark that we found as the base cost in Accra for that particular housing type. So we look at low density, medium density, and higher density accommodation. We cost out over 200 different elements of that house, of both including land and services, as well as construction inputs, as well as labor inputs, on a comparable basis that we can then comparison to other countries as well. So you will see the spread of housing costs that we indicated there. For many of you, those would probably look high, but please bear in mind that what we are doing is an absolute cost of every single cost implication, including land and services and any servicing that might be required on site if it is not provided by local governments or other players. What we then see is a not unexpected gradation of housing costs across the different components of housing, from a 65 square meter unit on the left right down to a 35 square meter unit on the right. We then focus on what we call the CAHF house, which is a 55 square meter basic 2-bedroom detached house on a service site in a reasonable location outside of the main city. And we start looking at more implications of the housing of that particular house. We can then start indicating that that particular accommodation, just under 50% of the total construction cost has got to do with construction. The rest are development overheads, VAT, land costs, infrastructure, compliance costs, etc. What we also see from that, from this breakdown, is we can start looking at relative costs in Ghana, and what we see is very high construction costs, the highest of all 8 countries we've benchmarked in Ghana. And the key component of that, in fact, is the cost of labor, which becomes a major consideration for any future policy going forward. We're then able to benchmark that against other countries, and you will see that Ghana sits relatively comfortably on the high middle side of the 8 countries that we've assessed so far. But bear in mind that versus South Africa, exactly the same house is 50% more expensive in Ghana, albeit that it is 10% less expensive than the highest cost, which is Nairobi, Kenya. You will see the breakdown of cost, which we can't go into here, but in the report, we do explore the specific elements of cost and what is creating that very, very high cost, particularly of construction in the context of Ghana itself. Moving on, I'm halfway through the presentation, so we continue to rush. We now get into the exploration of the macroeconomic impacts of the residential housing construction and rental activities in Ghana using CAHF's housing economic value chain methodology. I need to spend a brief minute talking to you about the basics of the methodology in order that the figures are understandable. We start in the middle by looking at the domestic production of housing, which is essentially all houses produced in that economy in a particular year. And what happens with that production is no surprise. It is matched to the total domestic supply, in other words, all existing houses in the country. And ultimately, that is then put against the domestic demand profile in that pyramid that I showed you. And all of the available houses are then allocated across all of the domestic demand that exists, with certain surpluses in the high end of the market and a whole lot of deficits in the lower end of the market. But to get to that domestic production of housing here in the middle, that comprises two things from an economic perspective. Number one, intermediate inputs from other parts of the economy. So for instance, we get sand and wood and other things from the primary or basic sectors of the economy. We get a whole bunch of inputs from the secondary sectors of the economy, manufactured goods, bricks, cement, roof trusses, galvanized steel, geysers, etc., all come from that sector of the economy. And indeed, we get a lot of tertiary sector or service inputs to the economy, real estate activities, legal activities, financial activities, and various else that are then matched with what we refer to as gross value added. And that is the construction activity itself that is made up of labor remuneration, all of the payments to labor, skilled labor and other labor, the indirect taxes and subsidies that might come into the equation here, such as government provided land or services that are provided by local governments, or indeed VAT and other subsidies that are offset against the total cost of producing housing. And then also the gross operating surplus, which in effect is the profit of doing business by various developers and contractors in that market. All of this activity then becomes part of the domestic demand for housing, and in the case of housing, becomes a part of final demand for household consumption to the extent that households take up the houses produced, or they form part of gross fixed capital formation, which becomes part of the engine of the economy driving forward. So let's now look at what our research has told us about the impact of housing in Ghana's economy itself. Sorry, just a quick digression to say that what we are looking at is really the direct impacts of the initial economic impact of producing housing and the first round impact of all of the demands for materials in the first level in the economic value chain. But what we do know is that there are still further impacts of housing on the economy outside of this very limited piece of the economy that we are looking at. There are indirect impacts, suppliers of various other intermediate inputs to those inputs that we provide. And indeed, there are a whole bunch of impacts from labor remuneration, interests, rents, and profits that are generated by those who create and supply housing, which then indeed create demand for a range of supplier and final goods and products. But what we're focused on is this very specific impact here. We look at two components of the housing economy. The first one is housing construction. And in terms of housing construction, our estimates say that 3.5% of Ghana's GDP is generated from housing construction, a total amount of $2.3 billion US. And that comprises 1.6%, or just over $1 billion US of gross value added in the economy, and $1.25 billion of GDP, or 1.9% of GDP coming from intermediate inputs. It's no surprise as well that a lot of those intermediate inputs come from secondary sectors, those are manufactured goods, and that a significant amount, but low for most countries, comes from tertiary sectors. This is a factor of Ghana's very informal housing economy at the moment, and a strengthened housing economy will see a further growth in the tertiary sectors as the housing economy. But it is a very significant figure, 3.5% of GDP. This was in 2019 before COVID. Clearly this would have dropped, but it does give an indication of a benchmark that can be attained and exceeded in Ghana's economic growth going forward into the future. Moving on, we did an analysis of the export performance of building materials in Ghana. There is not much time to go into this in detail, but we look at product categories in Ghana that are gaining market share and losing market share, and where Ghana is importing and exporting. The key thing to see here is that all of the gray indicates where Ghana is importing, and the red indicates where Ghana is producing and exporting. So there is a major potential to look at growing Ghana's market share, not only of export markets, but more critically of its own demand for produced materials in its own housing market itself. A major potential internal engine of particularly manufactured sector growth. We move then to rental activities. And in terms of the real estate or rental market, we see an even larger figure, 3.8% of GDP coming from housing rental. That's $2.5 billion US, roughly, comprising 1.7% of GDP, or just over 1.1 billion US value added, and $1.4 billion the internet. And must say that this is a huge difference from the national statistics and the data agenda going forward to really understand what is happening, particularly in the informal real estate housing economy. Formally, we know it's a very small sector. Informally, we think it's a lot bigger than the statistics may indicate at this stage and has major potentials for formalization. Combined then, we're looking at 7.3% of Ghana's GDP being generated from housing economic activity in construction and rental. 3.3% coming directly from gross value added from firms working in that particular environment, and 4% coming from Ghana's upstream secondary sectors. We must, however, indicate that we do know that there is a significant import leakage of goods coming in from other parts of the region as well as other parts of the world. And we would also strongly advise that there is a need to look at formalizing and creating protection and growth for the local industries that can do that. Kecia, I need 2 minutes. If you would give me those for my last 2 slides. I just want to indicate firstly that Ghana's economic value chain is comparable to where it sits in terms of its GDP across the that we studied, but there is still significant room for potential growth in this market. So let's just briefly look at some conclusions. We need to continue with the basics. The frameworks to drive access to reasonably priced, uncontested access to serviced land for development remains the major bottleneck in Ghana's development, and there are various policy initiatives to be pushed forward there. We continue to require better data. We battled with data, and we need to ensure available, accurate, and updated data in order that we can continue to measure and grow this sector. We need to ensure Ghana's housing sector manages the urban transition and the demographic change to the extent that the sector changes with this demographic change, move to urbanism, move to formality, and to overcome the very dominant small-scale rented rooms market, which really does not provide the complexion of housing that a solid economy should provide to its people. We need to look at improved effective demand, overcoming supply-demand mismatches, increasing affordability, better access to finance, such as being driven through the various schemes that we will hear about later. We need to continue to improve the housing finance ecosystem, to strengthen, broaden, and deepen financial infrastructure and capital markets. And we need clear, transparent, equitable, and competition-building based government participation in the sector to ensure that local developers, contractors, and manufacturers can benefit from it. And finally, in terms of housing in the economy, we need to acknowledge and grow the contribution of the economy and contribution of housing to the economy and its role on a locally denominated interest rates that are happening through some continue to grow construction and real estate value chains, strengthening the fundamentals and developing and tertiary economy to score that 50% of housing value that gets generated elsewhere in the move from informal to transition across the economy in terms of not and financing, but also the outcomes of real estate. And finally, this to continue to grow local manufactured goods in a way that there is safe import replacement and continued growth of the local markets. Thank you, Kecia. I think that was a minute or two too long.
Just in terms of the clock we have going, not in terms of the content you shared at all. So thank you very much, David. Really appreciate this. And this is, I find this such an interesting and rich report and methodology that we've applied in so many different countries. And I really welcome everyone to get a hold of the report and review it. We do have, as David has just put up now, a number of shorter executive summaries of the report that were published by the African Union for Housing Finance as a way to make the material a little bit more accessible. But I would really invite you to roll up your shirt sleeves and get into the actual depth of it in the report itself. So we will send everyone a notice of when the report is published. It should be any day now. And we would really welcome your feedback. Just to say thank you to all of you, you know who you are, who assisted in supporting David and his team in doing the work and in gathering the data. It was quite an effort. We visited in late 2019, just before the lockdown. And that, of course, had an impact on the speed with which we were able to finalize the work. And perhaps also challenge some people's reflections. So again, we'd really like for colleagues to engage with that. Let's move on now. One of the key things that David raised in his presentation is data. And that was perhaps right at the beginning when undertaking this work. It's about how do you gather the data to actually come up with the calculations so they're more than just a thumbsuck, but that they actually represent what's happening in the economy. And our experiences in that created this sense of, well, where do we find housing relevant data in the economies of African countries to really promote investment in affordable housing? And in that, a number of years ago, we partnered with 71.4 in building what we called then a data agenda for Africa. It's something that we still call that now as a way of trying to just crowdsource everyone's energy and activity in the housing space into really driving a data agenda where we collect the data that we all need so that we all can make good decisions. And then having developed that idea, we partnered further with Reall, who joined us because of their interest in supporting investment into affordable housing and their understanding as well of the critical need for data to enable that to happen. So Chris Garbers is from 71.4 and he drove this work. Let me hand over to you, Chris. You've got about 10 minutes.
Thank you, Kecia. Let me just share my screen here. Give me a second. I hope you guys can all see that. Is it coming up, Kecia?
Yep, it's right there. Thank you. Perfect.
Awesome. Well, yeah, I think Kecia actually did a wonderful introduction. Maybe I can stick to my time limit today. I'm Chris Garbers from 71.4, and together with some of my colleagues that are also on here, so we work with CAHF and Reall to develop these data landscapes for housing data on African continent, and we focus on a few countries. Today, I'm going to take you briefly through what the data landscape is, so how we approached it and what we're trying to achieve with it, and then also some of the kind of outputs that have come from that. One of them being the bottom 40 dashboard that CAHF will be launching, I think, tomorrow. So first thing, what is a data landscape? What are we trying to do? So the key idea behind doing the data landscapes is that we want to identify who all the key data curators and custodians are in a country for housing data. We assess what data they have available. We have a quality assessment methodology to rate the quality of the data. Is it relevant data to what we want? Are there any, is it becoming frequently available so that the data is remaining up to date? Is it accessible, or is it hiding behind a paywall, or do you need to be in person and maybe it's hidden in a document somewhere, so it's not very easy to analyze this data? Those are just some of the examples, and from that we develop areas of engagement with the institutions, with the different data curators, with the end goal to really improve visibility of the housing sector. So we did this for.
Chris, can I just interrupt for a second? Someone has just said they can't see the slides at all. Can I get confirmation from anyone else? Can you see the slides that I can see?
I can see them.
Okay, okay, Chris, great. Carry on. And for those who can't see, then we'll make sure that you get them afterwards. Chris, please carry on. Sorry.
Perfect. Well, yes, so as I said, the data landscape report's really focusing on, so we scope the current state of the housing data landscape, we see where the areas are for improvement in housing data, and we develop an engagement strategy to work through those areas and to improve visibility of the housing sector. So at the core of these assessments really are the set of 115 headline market shaping indicators that we developed with CAHF. So on the slide, I know there's a lot of text on there. It's more to try and impress you with the number of indicators that we have, but it's really, we develop indicators across the housing value chain. So we have indicators related to land and infrastructure. So they'll be talking about what is the minimum regulatory plot size for a residential plot, or how many with land title, how many title deeds are there? With infrastructure, how many houses, and we can start looking at the quality of homes. So how many homes have adequate sanitation or water services? And we kind of go through all the different links of the value chain to make sure we're kind of covering the breadth of activity in the housing market. We try and populate these indicators, so we gather data to populate them. Through gathering this data, you identify who the key custodians are. And we try to populate these indicators on a range of different aggregations. So there might be a national level one. For instance, how many houses are there living in houses with made from durable walls in the whole of Ghana. We also look at just those that are in urban areas, just those that are in Accra, and then the urban bottom 40, which would be the poorest 40% of the urban households. And sometimes we also get data straight from developers where there aren't any data available at a national or urban or bottom 40 level. So we might know, developer X built so many houses and they have adequate, the walls are made from finished material. And by doing this, as I said, the key thing is it allows you to see who the key players are. And from that, you can dive deeper. What other data do they have? So we aren't only looking at the indicators. We're also looking at what other data is available or curated by these entities. What do they have the right to collect? And from there, we can develop a strategy to say, well, there are these certain gaps, these certain blind spots in the housing sector. And these institutions would be able to fill them or to make them visible. And we develop an engagement strategy on that. So to give you a brief overview of the findings, we kind of, it's across the different countries that we did this in, there's these kind of three big groups of data curators that come out. And the one with the most potential, I would say, for unlocking data and improving visibility on the regulatory government departments that have data. Because these entities often collect data as part of a regulatory mandate, and it isn't necessary that the collection of the use of data isn't always the purpose. Therefore, wasn't to provide market information or market insights, and therefore there's a lot of data at these institutions that could be used in ways other than just having regulatory oversight and ensuring regulatory compliance. I've got a few here. I'm going to skip over this for the interest of time, and I'll speak rather to the Ghana specific kind of findings that we found that we made. And so on this slide, we've kind of got some of the key custodians that we identified in Ghana for housing data, and we've made recommendations along different dimensions. So either whether it is to unlock data, disseminate existing data in a different manner, disaggregate existing data. So it's the data is there, it's already being disseminated, but the aggregation of is not serving the purpose of improving the visibility on the housing sector that we would like it to. And then there's also recommendations around gathering new data. And I would say that, so some of in the red squares we've highlighted kind of, quick wins or high impact areas for improving visibility of the housing sector or improving the quality of the Ghanaian housing data landscape. So one of the things there you see for the Ghana Statistical Service, it kind of links to what David's presentation was that, you know, in the housing economic value chain work, the social accounting matrices are important inputs into that, but often they become outdated. And if you had more frequent iterations of them or more frequent updating, then you would have more relevant or more accurate statistics on the contribution of the housing sector to the economy. Similarly, for the national account statistics, very often it is quite difficult to get a disaggregated enough data on GDP statistics so that you can see exactly what was gross fixed capital formation on residential dwellings in Ghana in the last year. Another really other gaps that we identified was also the Bank of Ghana, where there is data available on housing finance. It's more the stock of housing finance as opposed to the flow of housing finance. So we might know how many residential mortgages are outstanding, but we don't know how many were issued in the last year. Another interesting one would be the Ministry of Local Government and Rural Development, where, you know, here we really have I would say one of the key underutilized data sets that we've identified across the continent in our work are the e-permitting, or even just the permitting systems for building permits, and how they can inform us on timelines, so the efficiency of the construction sector, as well as key statistics like, you know, housing starts and housing completion. So how many residential building permits were applied for, how many were granted, and how many occupancy permits were issued in the end. The last one that we've kind of identified there is the role for DFIs, and this has kind of kicked off with the Open Access Initiative, where, you know, oftentimes we struggle to get the detailed data on construction inputs or construction costs that David also presented there in the housing cost benchmarking work. And DFIs are in a good position here to where they are providing funding to developers, as a kind of a requirement on their side could be to get access to some of the cost or, you know, project level data that would give us a better understanding around land costs, labor costs, construction costs that we currently is much more difficult to gather and not often representative enough. So, you know, your sample size is quite small that you are sourcing this data from. This is like these are the kind of broad overview of findings for us. And one of the other things we did through this work that we discovered was the demographic and health surveys data sets, which are comparable across countries. It's the same. It's a survey that is more. It was, I think, originally envisaged more to answer questions around access to health, but there are a lot of great questions in there around housing conditions. And so, together with CAHF and FSD Africa and UK, we've built this B40 dashboard, which specifically at the poorest 40% of households in countries, and we can talk to their different housing conditions and try and get an idea of where the key kind of areas of opportunity are, in a sense. And we did this for quite a few countries. You can see that as the different countries we have data for. And what we managed to do, so what this data can tell us, it can tell us something about what bottom 40 households look like, you know, so what the family structure are. And here you can see for Accra, you know, you've 60% male, 57% are 35 and under, 40% of households are female headed. So we can get an idea of the structure of households. We can also get an idea of what their housing situation is. So for the poorest 40% of urban households in Ghana, about 97% of them live in houses that are visibly in need of investment, mainly because their sanitation is unimproved, so they don't have a flush toilet, or perhaps they're sharing it with other households, but also to some degree because the dwellings are overcrowded. And what this data also allows us to do then is to look at the overlaps between these different households and housing conditions. So we know that, okay, from the previous slide, you know, we've got 97% of urban households that live in dwellings in need of investment. The most of them are living in most of them come from households that have unimproved sanitation or sanitation that's shared with other households, and some of them are also, they don't have sanitation that's improved, and the dwelling is also overcrowded, or it's overcrowded, there's no improved sanitation, and their dwelling isn't made of finished materials. And this is so it gives you a lot of nuance around the condition of housing and where kind of the main areas of focus might need to be to improve the housing situation for these different houses. So this is just this analysis and this dashboard was kind of born out of this data landscaping work, and through this it has provided a lot more visibility than we had before, especially on a poor segment that is often very difficult to see in the data, because they are kind of, that they aren't always captured by formal systems. I think I'm going to end it for there, just to stick somewhat within my time, and I'll hand back to you, Kecia.
Chris, thanks so much. That was great. And I loved also the whistle-stop tour of the B40 dashboard. I've put a link into the chat if anyone wants to register, that there's a much more involved presentation, and then a test drive of the dashboard tomorrow at 2 o'clock South African time, if anyone would like to join with that. But it's very exciting work. And I think the important thing that comes from what Chris has said is that there really is so much data that exists, but we haven't yet liberated. I like to talk about liberating the data, to pull it out from its locked up filing cabinets or databases where I think a whole lot more could be shared than we do share. And that becomes so critical for making a difference in terms of actually closing a deal and developing a wise, well-targeted, well-priced, affordable housing project. Thinking about moving from data and information through to implementation, we've asked if Amos Mthembo, the operations manager at Reall, could give some comments on really what Reall is doing and some thoughts about the Ghanaian market and how we take this information and turn it into something useful. So Amos, can I ask you to please come on, and the floor is yours for 10 minutes.
No, thanks, Kecia. Can you hear me? Just double checking. Okay, brilliant. So I'm going to share a short presentation, which hopefully I think helps take you through what we've been doing in Ghana so far. Can you confirm you can see my presentation slide on the screen?
Absolutely not in presentation mode, but I can see you're clicking on that now.
Yeah. Is that
Yep.
there now? Okay,
There
thank you.
it is.
Okay, all right. So we recently completed a project in Tamale, Ghana. It's a 100-unit housing project, and I'll just take you through who we are as Reall, and then take you through the more specific project details. So in terms of Reall, we are an investor and an innovator in affordable homes. We invest in homes for families really which are in the bottom 40% of the income pyramid, which I think Chris has sort of given us indications on. We are currently targeting to build at scale, and what we do is we work with a number of partners in the countries that we operate in, and we really are a catalyst in markets, and through that catalytic effect, we then hope to encourage the market to then start to hit the scale which is required to meet the housing deficit. We work across 15 countries in Africa and Asia, 6 in Asia and 9 in Africa. Ghana being one of the countries that we work in. We have a number of priority markets. Unfortunately, at the moment, Ghana isn't a priority market, but as we go along with my presentation, I hope we'll get to a point where you start to see, I think, the benefits of us working in Ghana, and hopefully that ability to eventually have Ghana come on board as a priority market for Reall. So in terms of Ghana itself, we began working in Ghana in 2014. in that same project in Tamale. Unfortunately, I think our first attempt at the project did not go quite so well, and so we had to kickstart the project again in 2019. And what that meant is we had to start off with demolition and site clearance, and then we started building out the new structures, started putting in infrastructure works, and as I speak, the homes have just been completed. We're currently negotiating with the cooperatives on the ground in terms of offtake, and when we look at the cooperative members themselves, all the cooperatives member are people or families within the bottom 40%. So a bit more specific information on the project itself, and I think the information shared earlier by David and Chris is quite interesting, especially when we start to delve into, you know, the detail of what we have seen as Reall on the ground so far. So as mentioned earlier, we've just delivered 100 units. These are 2-bedroom, single-story houses with a kitchen, living room, and a bathroom, measuring about 65 meters squared on a site area of 12 hectares. Our total project cost to deliver those 100 units was about $2,795,000 US, but that excludes the cost of land, because the cooperatives that we're working with are the ones who are the landowners, and so we were developing on their piece of land. So when you drill into that per unit, it's an aggregate unit cost of about $27,950 US, which is way below what David was showing us for a unit of this size in Accra, and a cost per meter squared of about $430 per meter squared, excluding the cost of land. I think that cost per meter squared is quite interesting, because one of the things, or the comparisons that we tend to do within Reall, is the cost per meter squared of developments that we work in. And I think it was quite fascinating seeing how that was tying in with the research that David has been doing, because like David, we found the highest sort of cost of construction to be in Kenya, which is averaging between $500 to $600 per meter squared. I thought Ghana would have been lower, considering proximity to Nigeria, which has delivered the lowest priced unit in Africa at a cost of about $200 per meter squared. But surprisingly, Ghana has got quite high construction costs at about $430 per meter squared. We've worked with a main contractor. We normally work with partners, but in this case, we worked with a main contractor, Afri Group, and they've been responsible for delivering the project on the ground. So in terms of lessons learned, or I think things that we've identified whilst working in Ghana, the obvious one was the effects of COVID-19 pandemic and our response to that. And this has been quite interesting, considering we're an organization based in Coventry in the United Kingdom. It has placed challenges on us in terms of how we monitor our projects, because we're usually the ones who get on the ground to have a look at the projects and see how the project is running. In this case, we've had to use local firms of surveyors to support us with monitoring projects on the ground. We've also supported our partners in terms of if they were struggling to, have enough PPE on site for their workmen on sites. We've also been supporting our partners in this regard. And then in terms of just general communication, what we've been doing with our partners is having at times weekly calls with them, just to check in on what the situation on the ground is regarding COVID. I know in Ghana, at some stage on our particular site, we had to, I think, shut down the site for, I think it was about 2 to 3 weeks that we shut down the site as there was a spike of COVID in Ghana. I think that's in relation to COVID-19. In terms of high mortgage costs, we're finding that currently at a rate of about 16% interest, the mortgages are not accessible to our target market, which is the cooperatives that I mentioned earlier. So we are looking at a number of ways that we can improve access to the houses that we've just built for this group. We're looking at potentially help to buy schemes. We're also looking at other ways, maybe payment plans that are not necessarily long-term mortgages to really help the group that we've created to access the houses that we've just constructed. Other items that came into play, and I think David and Chris both touched on this, the location effect on the project. So I think the location has helped us to lower the cost in one way, in terms of the land cost is probably lower, and cost of labor is probably lower. But what we've found is that it's been a challenge getting materials within the region. So in terms of our partner that we're working with, they've had to bring chippings and timber in from Kumasi. They've had to bring the roof fixtures and internal sort of fixtures and fittings in. They've been importing these, and that took quite a bit of time. It actually took a lot more time than envisaged, and delayed the project slightly, along with COVID, and I think the election that I think there was a side shutdown for the elections that were held in December last year. The other challenge that we've experienced with our project is lack of skilled labor within that local community. So in terms of skilled labor, again, our partner had to bring in skilled labor at times from Accra and Kumasi. But what we've also been doing alongside our partner is making sure that we upskill the local sort of laborers. So the houses which were constructed, as you might have seen from the images shared earlier, were constructed using compressed earth blocks, and our partner has been responsible for training the local sort of community to work with that type of construction technology. They've been training up members of the community in the different trades, so as plumbers, electricians, and carpenters, and even just the general sort of bricklaying as well. There's been a lot of support that has gone into the local community from a training perspective. One of the other challenges that we faced on the project was inadequate infrastructure, and we had good electricity supply on the project. So our partner brought in a transformer. So there were no challenges on the electricity side, but where we faced serious challenges were drainage and water services, where our partner has had to drill initially 2 boreholes for the site, but then there wasn't sufficient yield on these boreholes, and therefore we've actually had to put in another 2 additional boreholes. So I think this is one of the areas where, looking at it, we felt maybe there could be a bit more government support on the infrastructure side to ensure that there's adequate infrastructure for affordable housing. One of the things that really drives up the cost of affordable housing is infrastructure, and if you've got to put in decentralized wastewater systems, boreholes, and probably solar systems, this tends to push the cost of houses relatively high, to a point whereby affordability starts to get affected for the bottom 40%. The other challenge that we faced was delays with building permits. I think Chris touched on this in his presentation, and it was difficult for us as a funder, an international funder sitting on the other side of the pond, to have a view on what was going on. And like Chris mentioned, an electronic sort of database which shares building permit information would be very useful, and would be, I think, quite encouraging for international sort of funders who are looking to play in the affordable housing space in Ghana. There was also the high cost of construction, which I'd mentioned earlier, linked to that $430 per meter squared cost that we encountered. It's one of the higher costs, and I think what we found was there's predominantly traditional forms of construction going on in Ghana, and there's probably a need to start looking at more sort of modern methods of construction, whereby we could be looking at modular construction to start to bring the cost down, particularly, especially if we're going to be, working in areas like Accra, where land will be quite, expensive to purchase. There's needs to look at other forms of construction. And then there was a lack of data, cost data. So we had comparisons in terms of our African network, but we didn't have local sort of comparisons where we could look and assess whether the costs presented to us by our contractor were competitive to other projects that are being delivered on the ground. I think what I would say is it's quite encouraging seeing the data that David shared. I'm now quite comfortable with what we were able to deliver at. I wasn't sure where we're sitting, but I'm a bit more comfortable. But I think there needs to be a conscious effort to generate that data, and we've been working with CAHF in terms of the open source data initiative, and I think this is really one of the areas that Ghana, should as a country should get involved in, to share that data. It encourages international funders who are playing in that space. So hopefully those were not too negative, but looking at the positives, we found a very, enabled environment by the government in terms of the finance sector. So we're having very good conversations with a number of local banks in Ghana who are keen to, work with us on the affordable housing market. They're looking at tools to profile, people in the bottom 40% and really make mortgages more affordable to families that are in the bottom 40%. So this is something that we found really encouraging in Ghana, and we're putting in a lot of efforts to make sure that in future projects we are, I think, collaborating a lot more with end user finance providers in Ghana. And then last but not least, I think one of the things that we've all identified in Reall is the ease of doing business in Ghana. It has been one of the easier markets for us to work in. Some of the markets we work in Africa, we face challenges due to language, predominantly being an English-speaking organization. We face challenges, due to language, and then we face challenges due to processes, that are implemented in most of these countries. Whereas with Ghana, we were able to work with a contractor with an understanding of a contract that we use here in the UK, a JCT build contract. We're able to, in terms of financing the projects, it wasn't difficult to actually channel, funds into Ghana, and it wasn't difficult for us to monitor the projects as well. We were very fortunate that our partner is quite tech savvy, so we were able to monitor the project remotely. They were supporting us through drone footage of, site visits. We were getting, updates from our consultant surveyors. So again, touching on the point that I made earlier, that at the moment, Ghana is not a priority market for Reall, but in all honesty, with all the, even the challenges that we've encountered, but on top of that, the ease of doing business, I think it is likely, that Ghana is going to come on board as a priority market in the not too distant future. I think I'll stop there, Kecia, and in closing, I'll just direct our audience to our website and our data dashboard, which will share a lot more information in terms of the work that we're doing across Africa and a lot of comparisons in terms of the individual projects that we've worked on so far. Thank you.
Amos, thank you very much. In fact, I put the link to your Msi dashboard for Ghana into the chat. And I do hope people go and take a look at it because it's very rich, and not just because it gives us the numbers. So this is the data that was collected in the exercise that Chris was describing. It gives us the actual numbers of those indicators, but also the source, so that on an ongoing basis, colleagues can go and investigate that themselves in those particular sources. So thank you very much. That was an excellent input. I'd like now to call our panelists to please come to the front of this Zoom room and turn on your cameras and for us to have a discussion on, well, what does this mean now in real life? How will this work actually impact on and reflect within the work that you're doing? I'm delighted to have, in fact, colleagues from the whole value chain, actually. So speaking from different perspectives, we have Dr. Teresa Tufour, who's the Director of Housing from the Ministry of Works and Housing, Mr. Delali Zumanu from the National Housing Mortgage Fund. He's the coordinator there. Mr. Patrick Ebo Bonful, who's the president of GREDA, the Ghana Real Estate Developers Association. Dr. Frank Giamfi Yeboah, who's a senior lecturer at the Department of Land Economy at KNUST. And Mr. Kojo Adu Kufuor, the executive head of home loans at First National Bank Ghana, and FNB Ghana is a member of the African Union for Housing Finance as well. We are delighted to have you all with us. And what I thought we'd start with as just a conversation around your impressions of the work. What are your thoughts of what it's saying? Does it resonate in terms of the work that you do? How would you like to use it and apply it? What does it make you think? Any of that. And let's start with Teresa. If you could perhaps provide us with your impressions.
Right. Thank you very much, colleagues. Good morning once again. And I agree very much with the presentations that has gone on this morning. And as a ministry and as a country, we are very much aware of the challenges that we face, the country, in that it's our wish that we could have had a robust and a growing housing sector. But then we have a housing deficit, which is an estimation of about 2 million houses at the moment. And as a ministry and a policy-making ministry, we've observed that indeed the issue for us is more to do with affordability. There is so much informality in the housing sector in Ghana, and that is what I would say is the constraints we have. And then you also realize that because the houses are not affordable, most of the households constraints are to do with the fact that their incomes are very low. So when you look at what has been developed or constructed and it juxtaposes on people's income, those in the low and very low income brackets are able to afford the housing units. And it's also because there is so much informality, like you reiterated that we don't have a lot of data. And without data, it's like you don't have the financial systems really working well. So as a country and a ministry, we have observed these challenges and we want to improve the system so that we make effective demand for housing more appropriate. What are some of the things we intend to do as a country and as a ministry? First, we intend to provide land with services. That is government going into partnership with local governments and some players, and then provide service sites to our developers, and also look at the construction material. That is the local building materials, because we don't have a manufacturing market, for the growth of our infrastructure, and then building materials that can be used. We also have plans of looking at tax incentives, because when we have this tax incentives for our developers, we do all these things with the hope of reducing the infrastructure costs, the building construction component. When we are able, we believe that when we are able to reduce the infrastructure costs, provide land with services, then we can have, the cost of construction reduced. When this is done, we believe that we can also look at the cost of mortgage financing. So the issues are with the land, that's providing lands with services. The second is looking at our local building materials, and then reducing infrastructure costs, and then last but not the least, the mortgage financing. Because there's so much, it's so much higher, we believe that if the we are able to partner with Social Security and the National Insurance Trust, and then workers' pensions are used as a collateral for them to be able to afford this mortgages, then we'll be seen as, working to improve the cost of mortgage financing in our country. So that is how we intend to, as it were, improve on our housing deficits. That is government's role that moving forward we intend to use. Thank you very much.
Thank you. That's great. I mean, it will be quite nice to, as you implement these initiatives, to track them and to see what impact. My theory of change says there should be an impact on that percent GDP number, and to start to track that, to see how and which of those interventions you're making realize the greatest impact in that context. Delali, would you like to come in now? We've just heard about efforts by the department to focus on mortgages, and you're the coordinator of the National Housing Mortgage Fund. Tell me your impressions and the work that you're doing to grow Ghana's affordable housing market.
Okay, thank you very much for this opportunity. I must add that this report really gives us some kind of baseline for us to make reference to in terms of what is happening in the sector. And at any point in time, we can make references whether we made progress or we are not making progress. And I find a lot of the findings very interesting. We've always thought that, housing contributed less than, the figures we are seeing now. So for me going forward, I've got a new figure that I can make reference to as the contribution of the sector to GDP. We've always thought it was smaller. Probably, I think that is a very good startup point for us in Ghana to have some credible report we can always make reference to and be able to speak to it, because we know some robust data collection was done and some, high standard analysis was done, especially when we are about the 5th or 6th country to have, gone through this process. My reservations are the following. The first one is to say that I think the report is a supply side, typically supply side report, in the sense that it only looked at the supply side of the market. That is why Doctor is very happy, because she's on the supply side. And it looks like the report, kind of he's giving her a lot to chew at, and a very detailed report that she can always look at and make some policy implications out of it. But for us at the demand side, we hardly were not thought about. The report was not fair to us. The report decided to leave us out of all this, but we are hopeful that going forward, as I raise the issues with your team, they probably could have killed, 2 birds with 1 stone at a point of collecting the data, to have collected some data for the demand side. My reason is that you cannot talk about a value chain in the housing market without the demand side. The value chain will not be complete, because if houses are built in, where we've always thought that the problem of housing is a supply side problem. But from the work we have done in recent time, the problem actually is not a supply side problem. We believe that if the demand side of the market is given the same attention, or had been given the same attention that the supply side has received for all these years, our markets would have been better off than it is today. I don't know why everybody in the space thinks that when we build houses, then the problem is solved. It has never been the case. If you build these houses and they are not built to the specification of the demand, it will not be sold. If you build these houses and they are built at places where people don't want to live in, it will not be sold. If you build these houses and they are beyond the price points of the person demanding it, it will not be sold. If the design does not fit the specification of the supply, it will not be sold. In fact, it will not be bought. If you build it at places where I do not want it as a demand person, it will not be sold. And so I want to make this point very strongly, that going forward, we all must advance our minds to the fact that the market, and I'll give you an example. From where I sit, believe that today, based on the work I have done in the last 3-4 years, I have seen a case where I have got people who are investors who want to build houses in our sector, who no longer are looking for government subsidy, guarantee. All they are looking for is a demand side that will say, yes, if you build the houses on my specification, on my price, on my demand at a good location, I am willing to offtake those for you. And so in one way, we are taking government out of it. Before, every investor who comes to Ghana to want to build wants government guarantee, wants government to offtake the houses, wants government to give them a sovereign guarantee or give them off-taker. Government is not the person who lives in those homes. Government can only create incentives for ordinary Ghanaians to own these homes. Now, what has happened going forward is this, and let me give you an analogy. If today I got 3, 4, 5 of the banks that work with me at the demand side to say that we have $10 million each, let's even say $100 million each, 5 banks who say these monies are ready to pay or to give mortgages, no matter the rate of the mortgage or the cost of the mortgage, I am very pretty sure that we will get investors who will walk into the supply side and produce those houses with their own investments, knowing that when the houses are built, there's a bank sitting down there who has demand to offtake those houses from them. And when that happens, there will be no glut in the market because supply always goes after demand. It is not the other way around. It is when there is demand that you will find supply going after. At least my small economics tells me that. And so I appreciate the work you have done, beautiful work on the supply side, but I want to bring this to your attention that you may want to also look at doing some work on the demand side. What work are you going to do? One, we're looking at what are the challenges or the constraints for the banks who are in the mortgage sector? How many banks are doing mortgages anyway? What are their rates of mortgage? What are their tenures of mortgage? How many mortgages are on their books? These are some of the questions that I believe we should be asking, because then it complements for us to even know whether supply is efficient, is effective or not. Look, today, let us build 1,000 houses in some different places. We're not even sure whether people want those houses, the types in which they are. And let me tell you what I have found out doing this project I've done in the last 2 years. People don't want 1-bedroom houses. How did I get to know that? I got to know that from the supply side, from the demand side, because supply side always thought that 1-bedroom houses will be cheaper, so people will like it, so it will go. But I have built 1-bedroom houses, and it took us hell to sell them because we did not actually do the demand side survey to be sure that people actually wanted 1-bedroom houses. I built houses for people using wooden doors, thinking that because it's affordable, when I use wooden doors, they'll be happy. Almost 60% of those who bought those houses have changed it to security metal doors.
No, I
built houses using T&J roofing. 60% of those who bought it have changed it into something else. I thought that that is what they would like. So I appreciate the work you have done. I'm only saying that going forward, for us, where we sit, I work in the demand side. I work with banks trying to make mortgages cheaper, trying to make funding available for people to go to, make this funding available for ordinary Ghanaians to pick these funds and be able to, buy houses with it and give them longer 10 years so that instead of the 5-7 years we have known all along, we are moving mortgages 10 years into 20 years. We are reducing the rate of mortgages from the market value of 2025 to as low as 12% and 10%. This is what we are doing. And so we believe that our market has potential if we focus on the right things at the right time. Thank you very much.
Delali, I couldn't agree with you more. I think it's a critical issue to focus on the demand side. And I think Chris will also be in support. And some of the data that you're describing was undertaken in our data landscape report. You'll find that as much data as we could find. And I think that that's a big challenge specifically to you because of where you sit within the National Mortgage Fund, that you can actually be the aggregator of the mortgage sector data. And then to take that data and to explore something that I think would be a really interesting opportunity, in addition to the questions you've raised, is to say, well, what are the relative risk levels of different books, of different target markets? And that analysis can actually be done. So I'm going to jump quickly now from the order that I'd listed, because I think this is a good time for Kojo to come in and talk about the experience of FNB Ghana. And then we'll come back to the supply side and hear from Greta and also from the Department of Land Economy at KNUST. But Kojo, would you like to come in now, please?
Thanks, and good morning, good afternoon to you, wherever you are. So I guess I probably would start from where Delali left off, and I have to agree with him when he says that it's not a supply side conversation. He's right. I mean, I think it's definitely a demand side. In fact, I'll go one step further. I'll probably say it's an infrastructure conversation. And the reason why I say that is because we have tried to do this long enough to conclude that really, if you look at it from the demand side, I think where government normally gets it wrong is to say that we have a database or a study which tells us there are 1.5, 2 million people looking for accommodation. And the conversation, once it starts there, they take that to be the demand side and then go off to say, okay, who can build to meet this demand, right? But it's been done enough times for anybody who's looking at it to conclude that even though government continues to try to address that through construction of more units, the demand side number doesn't seem to go down. And I think Delali quite eloquently explained why, because sometimes supply is being put on without any recognition of the kind of demand that's out there. And nobody's really even tested the demand to find what the effective demand really is. So it's a demand side conversation, but as I said earlier, it's actually an infrastructure conversation. And the reason for that is, if you look at how Ghana is set up, almost everybody wants to move to Accra. And almost everybody wants to move to certain parts of Accra, because if you live anywhere else, that your travel time to the central business district is easily 2-3 hours, right? If infrastructure made it possible for you to live on the outskirts of Accra or even outside Accra, a lot of the pressure that's being put on a certain part of the city would immediately evaporate, because the reality is, if you could live in even a place like Koforidua, which is a good hour and a half on a good day, you could live there and move into Accra, and the prices of houses there are much lower. So the infrastructure network that allows people to live much further away and get into Accra is what I've been advocating. In fact, whenever I get the opportunity, I talk about decentralization. Everybody who's looking to work in the form of some of the government departments and units should be moved into the various regional capitals. So a lot of pressure is being built on Accra, and that's kind of it's introducing a certain complexion to the conversation that, you know, there's so much pressure, houses are so affordable, so expensive, because everybody wants to live within a certain area. And the last time we had this meeting at another forum, I was saying that maybe if anybody wants to test this, they should probably put up a portal so that anybody who's really looking for accommodation can provide the details of what they want, their income level, so that there can be a real kind of matchmaking exercise. You see, what are people looking for and what is being supplied? And they will arrive at the conclusion that, without a doubt, what is being built in the so-called affordable space isn't always what people are looking to buy. And Delali has it spot on. I mean, normally when we think of affordable housing, there's this notion that it has to be 4 stories high, 1-bedroom units. But the people who are looking to buy are slightly, well, we know, usually more ambitious than that, right? So there's a certain kind of mismatch. There's never ever discussion around social housing. That also gets lost in the equation. The fact that it's a harsh reality, but the truth is not everyone can be a homeowner. And unless we embrace that reality, it makes the conversations very difficult to have. So there must be some kind of social housing which says, listen, you will not own a house, but accommodation will be provided for you. And it will look like this. And I think once we bring that in, it's easier to crack this, because for the number of times I've been part of such conversations, it starts off by saying, we need to provide accommodation, we need to provide housing. Then the question then goes, oh, what should the price of these units be? And then it goes from there to how much do the people earn who will be looking to buy these units? And given the kind of salaries we have, it quickly descends into numbers which frankly are just not feasible. And then somebody comes up with the assurance that they can build in that price range when clearly they can't. And then you find by the time they are done, they build the units, it's 4 times what they promised they're going to buy, to sell them for. And the people who they had in mind when they were going to build in the first place still haven't been satisfied. So we've gone around this cycle quite a few times. I mean, I'm going back to 2007, 2008, and every 3 or 4 years we go around this cycle. There should be a portal which profiles the effective demand and almost pre-approves so that people build to clear that demand. And I feel quite strongly about that. I also think that there must be a decoupling of a housing conversation from mortgage financing, because the reality is I have it around 20-25% of properties that are built that are mortgage financed. So for any given developer, if they build 100 units, if they'll be open enough to tell you how people buy these units, they should tell you no more than 25-30 of them are paid for through mortgages. The rest are cash financed on installments. So, and as much as I'm an apostle for mortgage financing, I'll be the first to admit that a lot of what the construction that goes on around here is financed through individual savings and personal revenue. And it's important to embrace that fact, because otherwise we try to bring two conversations together that might not naturally belong together. I mean, I know in other more mature markets, the housing sector and the mortgage finance sector almost move in tandem. In Ghana, one is way ahead of the other. Much more construction takes place than the mortgage financing would suggest. I know we'll get there, but we're not there yet. So when we talk about housing, I think we should do it without necessarily bringing mortgage financing into the equation. And also trying to kind of force fit those two. I'd like to congratulate Reall on the Tamale project. We've been very closely associated with it since 2015. And I think that's a hallmark for the kind of houses that we need to see outside Accra, and even in some parts of Accra. I'm quite curious to find out the price build-up, because frankly, I think it's a bit on the high side. I'll probably pick that conversation up with them offline. But I think altogether, today's presentation has been very educational. Again, in terms of the data that's been put out there, I've really enjoyed the session. I'll be curious to find out, to read the report and get into the methodology, because I'm just trying to understand how some of the data sets were provided. The data is usually very hard to come by, and even when you get it, unless you can wash it down, there's a lot of noise in there. So I like to see what kind of research, and I haven't been able to read it, so I'm quite keen to get to that and then read it. But I mean, the conversation must go on. We really need to understand some of the dynamics that drive the housing sector, which I still think, I mean, I know the graphs show that it's not a very significant part of the GDP, but I think we might want to look at that number again. I think the whole of Ghana is a construction site, and I'm quite curious to see how it represents less than 1% of GDP. But as I said, I'll read the report and educate myself. So thank you once again for the opportunity to contribute, and I think I'll probably end here.
Thank you so much, Kojo. I mean, we would love to interrogate the data further with you, and also to see how your experience in the mortgage lending sector and the mortgage book that you've put together, how that relates to the broader market. I hear your point about how mortgage can't be the be all and end all. And we know that there are the vast majority of households across the continent will never be able to access a mortgage, either because of the quantum or the shape of their incomes. And there's a lot of space for mortgage innovation on the one hand, but on the other hand, about recognition of other forms of finance. And it would be interesting to see in the future if that's something that FNB Ghana also starts to move in the direction of, non-mortgage housing finance. But let's hear now from Patrick Ibobonful from Grida, back to the supply side and your impressions of the work and of the conversation so far.
Thank you very much. I've been listening to the conversation, and so far, I think that we've been able to come up with some of the challenges that are facing the industry. The data and its analysis, I will leave it for the experts to handle. I will speak from the practical point of view. What we are facing as developers is a challenge with access to mortgages. That is number one, realistic mortgages. We supply these houses. Would-be purchasers just can't have access to mortgages to purchase these houses. So we have a big challenge with that. Number two, following from what my good friend Mr. Dokufo said, is an infrastructure challenge. The infrastructure challenge is a big issue. It has to do with provision of utility services and so on and so forth, extending these services to the various sites where we develop. And these are costs that we incur, and we bear it all 100%. And at the end of the day, the expectation or the general expectation is that we should be able to provide these houses at affordable prices. So these are key issues we need to look at. We need to look at a realistic infrastructure finance strategy that we can adopt so we can be able to solve these issues. And touching on Dr. Tufor's issue, we have to encourage the use of local materials in the building construction space. If we do that, it will reduce our cost of construction significantly. For instance, if we encourage the use of bricks, I have been using bricks in the construction of some of my homes. And comparing the cost of sandcrete to that one, I realized we have cost savings of up to about 35%. This is significant in terms of our effort to achieve affordable housing goal. The other thing is that we need, as Mr. Domer said, he said that we need mortgages that are affordable mortgages. So all these things will play into allowing us to deliver on affordable housing. Another key thing which we have observed is that's from the demand side. Mr. Destin alluded to it. You see, a lot of the buyers, they are looking for quality houses, but at the same time, they are looking for houses that have Chinese prices. It doesn't work. So we will need to re-examine all these things if we have to examine what the demand side really wants. The demand side wants something that is close to luxury, but they can't afford it. And they are not honest enough to come to that realization that I can't afford that kind of building. So if we can go back to basics, the reality is that like state housing was doing back in the 1980s and 70s, they build the houses, it's more or less like a shell house, the shell of the house. They give you louvers, the floor is not tiled, it's just created floors. They give you a kitchen sink only in the kitchen. They give you wooden doors, panel doors in the entire place. And then the house is handed over to you, the buyer, at a very good, affordable price. Now, subsequently, once you've been able to enter the housing space or be able to own the house, you can decide to change it and make the floors gold, tiles made of gold. You can do anything else you want to do. That is the reality we need to let Ghanaians understand, that this is the reality. You can't say you want luxury and yet you want to pay affordable prices for luxury. So these are my observations, and these are the realities of the challenges we are facing on the market. And I hope this conversation will carry on from here. And we at Grader are of the opinion that some of the laws also should be reviewed. Okay, the reason why banks are shying away from mortgages, we have repeatedly said it, and the reason is that the mortgage law as it stands doesn't protect them enough. Should a customer or client default and they need to recover their property from the customer, it is like hell for the banks. And no bank wants to continue to invest in and put money in an investment that will be very difficult to recover. Remember, the banks are using depositors' money. So if I put money in the house, and if the person defaults, and I need to take that house and foreclose and sell it and collect my money back, and then I have to go to court and spend 7 years, 8 years to recover one property at great cost, legal fees, here and there, inconveniences. The next time, if I'm a banker, if you walk into my bank and you're asking for mortgage, I will tell you, mortgage is not available anymore. So we have done presentations to the relevant authorities to look into that law. We have given detailed presentations. If they do that, you don't need to call on the banks to invest. And we are also saying they should open the mortgage investment market, not to just banks, open it to private investors to be able to, you don't need to be a bank before you can provide mortgages to would-be buyers of homes. We are in a crisis period, and we need to re-engineer our thinking, and we need to do things differently to make things work for us. If I'm holding $1 billion, and I say I want to grant mortgages to 100 people, and I should be able to do that to the extent that I've not asked anybody to deposit money with me. It's my own personal money. The law should be able to protect me so that I can help other people to access mortgages to buy properties. So in our proposals, we have said strongly, these things must be looked at. We must fine-tune our laws to suit the realities of the day. And these are some of the realities that we face. So these are some of my comments, and I've enjoyed the conversation so far, and I hope we can carry it further. Thank you so much.
Patrick, thank you very much. I think that that was such an important appeal, that we really do need to be real about affordability, and then develop the products and services that respond to that market and the capacity of that market. You made some interesting points in terms of, I think the space between social housing and affordable housing is incremental housing. So that over time, people can improve their houses to the point where they can make their floors golden. And then there have been lots of questions in the chat also about the about income data for Ghana, and how does one access that and make it particular to specific neighborhoods, and how critical that is to really be able to understand where one makes a contribution and an intervention and how one targets one's project. So thank you so much for that input. I think that was really valuable. The other thing, and I'm conscious we're slowly wrapping up now. So Frank, I'm going to come to you and I'm going to ask you for your help to help me wrap up the discussion and to pull together the strands. The one thing I did note from you, Patrick, is that your recommendations were very similar to what Teresa Tufor's recommendations were about what the government is doing. So there does seem to be an alignment, a focus on local building materials, a focus on reducing infrastructure costs, and a focus on mortgages. So there does seem to be a consensus that we have, and hopefully the more data that we collectively pull together and then share and produce, the more precise we can be about the interventions that we then design. So Frank, coming to you now, and I think this is perfect for you as a senior lecturer at KNUST, that you can take the story forward and wrap it up for us. I'm interested in your thoughts also in this dance, which I've heard also in other economies: demand side, supply side. The banks say it's the houses, the developers say it's the finance, and trying to pull all of that together, because indeed it's both, and we have to bring that conversation together. Can I ask you for your insights as we close?
Yeah.
Are you there? We heard you briefly.
Yeah.
We can hear you. Please go ahead.
Thank you very much, Kecia. It's been a pleasure being part of this. And thanks very much, David and Chris, for your presentations. Very, very insightful.
Frank, we're really struggling to hear you. It looks like we've just lost him. So hopefully he'll be reconnecting, and then we can let him make his input. There have been some really interesting comments here. And Chris, can I ask you to quickly comment back in on some of the data questions that have been raised in the chat, if you want to make a short input there?
Hi, Kecia. Yes, I hope you can see me. Well, I think that, it was interesting, the talk on both sides, the supply and the demand side. And I think that what we've seen across the continent is, and we've struggled with this ourselves, one of the indicators, affordability of the cheapest of the cheapest house that we can identify in a country. And there are so many assumptions that go into that. And of course, you have the financing inputs, so what are the mortgage terms? So like the years, the interest rate on the mortgage, the loan to value ratio, what is deemed to be a relevant installment to income ratio. So we use a rule of thumb of 0.3. Is that even really relevant in the context of the country? And then obviously the underlying income data. And what we have found is that in some countries, well, on the financing side, the central banks really play a key role. They act as supervisor of the financial system, and they have access to a lot of this data at an institution level that they can package together, anonymize in a sense, and disseminate, that you can now have a representative view of what is the interest rate range. So the the lowest interest rate on a mortgage issued versus the maximum interest on a mortgage issued. And that can give you something to play around with that is actually relevant. On the income side, we do have household survey data that is collected around about every, you can say 2 to 4 years, depending on the country, that gets used by the National Statistics Bureau as an input into the inflation basket calculations. There you can get an idea of how much they spend on a regular basis, but that isn't always that accurate because it's what they recall themselves. An alternative measure might be what from the social security boards in a country, what people contribute there. There you have actual data on what the incomes are. Of course, you are looking at perhaps not always the poorest population, but you have a better idea. You have that kind of transaction level, individual level data. So those are two big gaps that the data exists in a sense, but liberating it from its institutions is kind of where the next steps are. And that will provide some better insight on the affordability side of things. And then, as I mentioned earlier, just is on the building permit side, there are systems in place that will give us an idea, that could give us a better idea of costs and process timeline. But I think I'll leave it at that.
That's brilliant. Thank you so much for that, Chris. Frank, are you back? We'd love to hear your comments.
My apologies, please. Yes, so I think the reports are very, very insightful. We've always known housing has a huge role to play in the economy, but we've never really, quantified its direct impact. And I think what David's presentation does is really to give us a clear sense of the quantum of impact that it has on the economy. And I think 7.3% of GDP, in my view, is quite significant, given that we know there are several constraints and rigidities that really impact on the growth of the housing sector. So I think it gives us something to think about and to see what the potential is if we could address the rigidities and the constraints that the sector faces, as has been articulated by the other presenters. One of the key things I think that has been mentioned is the data issue and how reliable data is in the country and how accessible it is. From where I say data exists, or we generate data every day. However, we do not really have a systematic way of gathering and sort of cleaning up the data we generate so that it can be used to make decisions. And I think that impacts on the ability of policymakers to really understand the problem that we face. We've been dealing with issues of understanding the nature of the demand, that we have, and to understand how people really even make purchases of properties, even in the midst of the lack of a viable and active mortgage market. I think there's a lot we can gather there to understand really what drives the demand side of the market and how the preferences can be shaped. Because the key point is that people prefer what they prefer, but sometimes it's unrealistic. And with education, you can change that preference to a point where we can begin to match demand and supply. Because what I see is a mismatch, right? There's supply on the market, but it doesn't match the demand that exists. Why is that? It's something is missing. And so there has to be a mechanism of market education that can begin to address the realities that we face. If you want a 3-bedroom house on a big plot of land in a certain location, that is all great and good, but is that something that you can afford today? Can you aspire to that, but at the same time have a realistic expectations now, and then aspire to that ultimate goal? And so I think we need to really understand and then also educate the market. With regards to the cost of construction, I was quite struck by the fact that we're quite high compared to our neighbors or other countries in the sub-region. And what really struck me was the fact that the labor cost seemed to be what really is the biggest challenge. We've all known that we import a lot in building materials. So that would be one of the key drivers of cost. But hear that labor cost is one of the key cost drivers. Quite surprises me because we don't import. Well, we import labor to some extent from our neighbors because we don't have all the skilled labor. I thought that we also use quite a number of our locals in the construction industry, and so that would have pushed the prices up, as we have seen in the report. And that gives us a lot of work to do to try to bring that down, because it's strange that we can do a project in Nigeria for $200 a square meter, but the same project is $400 a square meter in Ghana. That doesn't make a lot of sense to me. And I think we need to understand that a bit much more. And one point that was made also about the use of local building materials, that has been talked about for several years, several decades. I mean, and one of the key things is that, for the average person, they are unwilling to experiment. They are unwilling to try a new thing because it's risky for them to do that. They have limited funds. They don't want to try anything that may not work. So I think the public sector has to take the lead in sort of using some of these new materials to demonstrate that these are good materials that can be used. They reduce costs, but they're also quite good in terms of being a replacement for what we use now. All right. And so overall, I think this has been very insightful. There is a lot we can learn out of this, and I think this, to my mind, should be the starting point. This should be sort of a baseline study, as Adela mentioned, and we should build on that. In the next couple of years, to sort of begin to track the changes that can occur and the impact that those changes can bring to the housing sector and to the economy overall. So I'm quite happy with the reports, and they're very good reading them. And I thank David and Chris for doing this. Thank you very much, Kecia. Yeah.
Thank you so